Welcome to the deep dive. Okay, let's unpack this really interesting jump we've seen in activity on the Ethereum blockchain. This on-chain data, it gives us such a clear window, really, into what's actually happening under the hood in crypto markets. It's quite unique.
Yeah, it really is. And what's fascinating here, our mission for this deep dive, is to figure out what this increased Ethereum activity really means. We'll try and connect it to the bigger market picture and also what's going on with stablecoins. And just so everyone knows, we're drawing this from recent on-chain analysis, specifically looking at insights from Centaura and Glassnode, which came via a financial insights provider.
All right, so to really get into this, we need to talk about a key metric. It's kind of like taking the network's pulse, right? It's called daily active addresses. Basically, this indicator just keeps track of the total number of different Ethereum addresses doing something like any kind of transfer each day. When it goes up, well, it suggests more users are active, maybe more trading interest.
Exactly. And, the flip side is true, too. If that number drops, it could mean investors are stepping back or maybe focus is shifting elsewhere. It's a pretty direct measure of engagement. Really tells you where people are putting their attention on the network.
And the data here is pretty wild. Ethereum's daily active addresses just hit 931,310. That's the highest it's been in almost 2 years. I mean, think about that. It's not just a little increase. It's a massive spike way above that sort of 600,000 level it was consolidating around. Like, the network just suddenly got way busier.
That's a significant jump. And historically, this kind of high transaction activity, lots of users making moves, it's often been a sign that volatility might be coming. It's like a buildup of activity before a bigger market move. But, and this is really crucial, while it signals activity, the metric itself doesn't tell us if it's mostly buying or selling pressure.
Ah, okay, so just action. And it seems like that might have played out this time. The source suggests this spike could have directly led to some volatility. Specifically, in the 24 hours before the source published, Ethereum's price actually dropped about 3.5%. It was trading around $3,650. So the activity spiked, and then the market reacted, downwards in this case. For you listening, that's a pretty clear example, right? Underlying activity surges, market potentially shifts.
Precisely. And connected to this is another interesting trend with stablecoins, specifically USDT transfer volume. We've seen USDT's 30-day moving average for transfer volume recover. It's back up to around $52.9 billion. Glassnode noted this, saying it's a gradual climb, reflecting a slow but consistent recovery in stablecoin velocity and market activity since the crash back in 2022. And velocity here just means how fast these stablecoins are changing hands, moving around. Higher velocity usually means a more active, dynamic market.
Okay, but here's where it gets really interesting, maybe a bit confusing even. Despite Ethereum having all this increased general activity we just talked about, it actually hasn't been one of the top 2 networks for USDT volume. Why do you think that is? I mean, what's that telling us?
Yeah, that's a great question. And if we connect this to the bigger picture, it's pretty revealing about how these different blockchains might be specializing. So the network's leading in USDT volume right now. That's Tron with a huge $23 billion, and then BNB with about $14.9 billion. This difference, it's quite stark. It suggests that even while Ethereum's busy overall, maybe users prefer other chains for just moving stablecoins around, possibly because of lower fees or faster transaction times on chains like Tron or BNB. They might just be more efficient for that specific use case, like frequent trading.
Right, so different chains for different jobs, essentially. So let's bring it back to you, the listener. Why should you care about these on-chain numbers? It's really not just about trying to guess the price direction. It's more about seeing the underlying health, the actual usage patterns of the network itself. That's the real foundation.
Absolutely. Knowing these specifics, like how active addresses might signal volatility or how stablecoin volume is spread out,
Yeah.
It helps you build a much richer, more nuanced picture of the whole crypto space. You're getting beyond just the headlines, right? You're looking at the actual flows. And it does raise an important question, doesn't it? Like, what does network activity truly mean today, and how should we measure it when different chains seem to be focusing on different kinds of activity?
So wrapping this up then, what have we seen? A really big spike in Ethereum's daily users, which hints at more volatility, maybe already seen in that price dip. And then we have this other piece, the stablecoin puzzle USDT volume is recovering, which is good, but it's happening more on networks other than Ethereum.
Yeah, exactly. So maybe the thought to leave you with is this. What is that combination, more general use on Ethereum, a price reaction, but stablecoins moving elsewhere? Tell us about how this whole blockchain ecosystem is evolving. Where is the real activity happening? And maybe what kind of activity matters most? How will we actually judge a blockchain's success going forward? Is it just market cap or something deeper about its actual use? It's definitely something to think about.